traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video, or should say you're watching the week ahead video for May 20th, 2018. Hope you guys are having a great weekend. And, there's actually a few things I want to talk about, but before I get into them, really important ones actually, I do want to mention if you haven't tried ForexAnalytix, you should do so. It's only $1 for 10 days. All you have to do is click this button right here where it says sign up today. When you do that, you're going to get the old platform because we are currently testing the new platform and we're about ready to release it. And like last week, you can see the difference between this is the original platform and here is the new platform where we have all of your analysis right at your fingertips, right on one page, which is really cool, where you can get all the charts and everything. And I'm gonna actually keep it on this page because I also want to mention that once you try ForexAnalytix, make sure you download the mobile application, which we did update the mobile app on the iOS and Android stores, and that's the Google Play Store. And if you have the old mobile application, make sure you delete it and upload the new version. All right, so there's a new version out there which we feel is much more intuitive. I don't know any other companies that do what we do in the space that we're in, that delivers you the technology, the updates, the platform, anything close to what we do, especially for the price that we offer. So make sure you try it out. It's $1 for 10 days. And you can try it out, check it out, and see how you like it, and what you can see everything that we're doing here, and I think it's awesome, and I think you guys are going to find it awesome as well. Okay, now let's talk about what's happening this next week really quick. This next week, there's not a lot of data this next week, especially here in North America, but there are a few key data points that are happening this next week, which we have New Zealand retail sales actually on Sunday night, and if you look at the Kiwi dollar and how we ended the week, the Kiwi actually ended on a strong note on Friday. You could see we had this pin bar or maybe inverted hammer. We have this triangle. We've been respecting the 88% retracement for the last few sessions, and we're trying to recover now. A lot of you probably know that the dollar has been very strong in recent weeks, and we've been talking about a turn in the dollar for the last couple of months, and it transpired, but we're actually seeing the dollar pause a little bit now, keeping in mind that over the weekend China and the US have wrapped up their, at least for now, trade talks, and actually Treasury Secretary Mnuchin was on TV on, I believe, Face the Nation, or one of the television shows here in the U.S., where he says that China-U.S. Trade war is on hold. Basically, that may be good for the dollar coming into Sunday, but the dollar has shown a little bit of hesitation across the board, which I'll talk about in a little bit. But I guess we should, let me go back and take a step back and talk about, again, going into this next week. We have New Zealand data coming out on Sunday, and it's going to be interesting if the Kiwi dollar can get back above 69.50. If it breaks back above 69.50, which is a previous support here noted in the dotted line, we might start to see a recovery in the Kiwi. There's other things that are happening this week as well, like we have the UK inflation report on Tuesday, and if you look at the cable, longer term, the pound, and this is the weekly chart, we're at a 38% retracement of the post-Brexit low to the 2018 high. We still have a double top, but we're at some pretty key support. Now, if you go to the daily chart, you'll see that the pair is actually weakening into that support, and the 200-day moving average is capping the pound. But if the pound gets above 136, then we should retest the neckline, which is 137. I still think overall we're going back down towards 130 and change, or below 131, because that is the double top you can see here. Here's the neckline. Okay, so I think eventually we're going lower, and perhaps because of the positive news out of China and the US over the weekend, maybe the cable actually breaks through this 38% retracement. I will tell you guys, if 134.40 is broken and we close below it, that's not a good thing, especially if you're bullish. It's a good thing if you're bearish. We do have that inflation report hearing that comes up on Tuesday, so keep that in mind. We also, out of the UK on Wednesday, we have inflation data, CPI data, so we're gonna have to watch that pretty carefully. Speaking of Wednesday, we have the FOMC meeting minutes. Okay. I guess I should also mention on Thursday we have UK retail sales. That could also be an influence here in the cable. Wednesday we have FOMC meeting minutes, and that's pretty much the highlight actually of the entire week for the U.S. We have durable goods orders on Friday. And also out of the UK, we have the Bank of England, Carney, he is speaking. We have second estimate GDP, so the pound might be influenced a little bit there as well. In the Eurozone, we have PMIs midweek, the Eurozone PMIs, which will be watched fairly carefully as well. But let's take a look at the dollar index. I'm gonna actually take you over to the dollar. Here's the dollar. Dollar has been very bullish. You've seen this really severe rally bounce right out of the downtrend line, and the 2017 basically downtrend. But notice where the dollar's at. We're at a 78% retracement of this is the December, or I believe it's actually November peak here. Then the lows of 2018, we're at a 78% retracement. The dollar index daily RSI is overbought, divergent as well. I still think we're going actually a little higher to 94 and a quarter. Now 94 and a quarter, why it's so significant in the dollar index is it is a 38% retracement of the trend highs back in 2017 to the lows of 2018. That's a 38% retracement, and also the 88% retracement of the most recent leg lower. So I still think we can reach 94 and a quarter. However, relative strength is signaling that we are probably closer to the end of this bounce than the beginning of the bounce. Now, do I think that overall this is constructive bullishly for the US dollar? I do. I actually think that dips towards 92 are going to be very well supported. Dips to the 200-day moving average in the dollar index are going to be very, very well supported. So I know I said that twice, but I said that twice purposely. Okay. Now, we didn't take a look at the euro, but let's take a look at the euro, because I think the euro, which is going to coincide with what I was just talking about with the dollar index, the euro dollar weekly chart, you'll notice the breakout point from back in 2015. This is a weekly chart now. It's the dotted line here. The breakout point also coincides with the 38% retracement of the 2017, or basically those trend lows to the highs. So you got the lows to the highs. The 38% retracement comes in at 117.10. All right. Also, it is the breakout point. And if you go over to the daily chart, it's also 161% extension of the last move. So I do believe that the dip towards 117 and a quarter is going to be very well supported for the euro dollar. I know there's a lot of news regarding Italy, and I think overall the trend is lower, but this should produce some sort of bounce. Now, the last thing I wanted to talk with you guys today is I'm going to take you over to a couple of charts. I'm going to take you over to the dollar yen. Now, the dollar yen has had a hell of a recovery. I've gotten caught trying to short this thing when we were up against the wedge highs around the 110 level, the 200-day moving average. We continue to move higher, but we have reached, and let me go back to that weekly chart. That's a 4-hour. Oops, let me go over the weekly this way. Okay, we are at a 618 retracement of the November 2017 highs to the trend lows. We're at a 618 retracement. Also, 161% extension of the most recent down leg. And you see how we set up a reversal candle on Friday? Okay, that's a long upper shadow doji, which tends to be bearish. I say tends to be because it's a neutral sign, but we'd have to look for a confirmation lower. Now, with the news that just came out over the weekend regarding China and the US, the dollar index could be higher, the dollar yen could be higher, but the most important thing is where we close. So we might run back up towards 111, but where we close going into Monday, Tuesday is going to be very important for the dollar yen. Now, what's more important than just the dollar yen is what's happening in bonds. So I'm going to take you over to the bond market, which is the 10-year treasuries. Okay, we had this descending wedge, which we really respected it at the end of the week. You can see Thursday, Friday, we had the bond market close with this is a Morrow Bozu, however you want to say it, closing white candle, which is a bullish sign for the bond market actually on Friday. Now, how the bond market responds to the China news Sunday, Monday is going to be really important. But if the bond market starts to break back above 119, that means that yields are pulling back. Now, I'm actually going to take you over to a Bloomberg chart, and I want to show you pretty important charts here. This is the 10-year yield. Now, the 10-year yield closed above 305. 305 is a big breakout point. You can go back to, this is 2013, and December of 2013. You can see, and this is the chart is a bar chart, but you can notice how we closed at the breakout point. All right. Now I also want to take you over to, I'm going to take you over to the 30-year. Okay. Okay, there's your 30-year. And on the 30-year, let's go ahead and throw in a, no, not a pointer, annotate, horizontal line. Let's take you over to right here, same thing, 2015. You notice that the 30-year yield poked its head above resistance, okay, and we're closing. Now let me go over to, let's go over to weekly 10-year. All right, and let's grab, let's drop that, that horizontal line back in. Annotate. Okay, and notice how the 30-year yield also has not broken out either. It was trying to break out on Friday. It was actually threatening a breakout, or it was actually Thursday, Friday, but we failed. We've come back. That doesn't mean it's not going to break out, but there's a lot of technicians that are looking at this big, like, possible inverted head and shoulder pattern. But what it could also be, it could also end up being a it could end up being a bullish wedge, which what I mean by that is if we end up failing here, okay, if we end up failing here and coming back down, it could end up being a bullish wedge, which means it's going to eventually break out more than likely, but that doesn't mean it's going to break out right now. And when I was just showing you, let me pull this back down. Okay, what I was showing you is this descending wedge in the 10-year, and with the 30-year yields failing to break out, I'm not 100% sold that yields are going to bust out higher yet. There's a lot of people that believe that, but what we're seeing here, especially with the divergence, technically, for technical reasons, and you know, it's let me just put it this way: we are at an inflection point. We are, no doubt about it. So, and I believe this is going to be the driver of the currency market for the next several weeks. So, if the bond market continues to stay weak and yields stay strong, that's going to be a very positive development for the dollar. But there are risks, and the dollar has gone pretty far in a short period of time. So with that being said, I think the risk is that the dollar could start to show some signs of toppiness around here and eventually break higher. But we've had a great move. I mean, we've gone, let's just put it into context here. We've gone from 90, basically 90 and a half, to 94 in the dollar index, or close to 94, and may go a little bit further. But that's a pretty big move in a very short period of time, which, short squeezes, is, if you're looking at a downtrend, which we have here, short squeezes are usually pretty violent and steep, and that's what we've seen in the dollar index. They're very convincing too. A lot of people, it tricks a lot of people into believing there is a bottom technically, and then what happens is the downtrend, like in this example, the downtrend takes hold again, and we end up staging another low in the dollar index. It's hard for me to look around and say, okay, well, what is going to cause the dollar to hit a new trend low? I don't know in the foreseeable future what could develop it and what narrative the market decides to trade on. But that is also a risk. I have to point out that the dollar index has been in a strong downtrend for the last year, especially if you think about it from a longer term perspective on a possible, oops, let me go back the other way, a possible false breakout of the highs. This is a false breakout for those of you that didn't see 2017. Don't forget the fact that we broke out, got everybody long, and then broke down. This might be the start this last year in 2017 of a much bigger downtrend in the dollar for the years to come. Again, I can't see it, and I can't rationalize in my head from a macro perspective what is going to surface that would be dollar negative for the next couple of years, but the risks are still there. So for those of you that are bullish the dollar, don't forget the fact that we did have a false breakout back in 2017 that caught the market off guard. All right, it is a tricky area, and I'm not gonna lie to you and say it's really clear in the markets, because it's not. But we are in an inflection point. I think we need to watch bonds going into next week, especially with the lack of employment data or interest rate decisions. We should really be watching the bond market. Guys and gals, if you like this video, please click the thumbs up button on if you're watching this on YouTube, and then also subscribe to our channel so you don't miss any of our great interviews throughout the course of the week. We offer a free live webinar where we give you our thoughts on the trading day. It's called the Face webinar. Make sure you're listening to those, and if you miss them, make sure you listen to the recordings. That's why you subscribe to our YouTube channel. And you guys and gals have a great week this next week as we wrap up spring and we get into summer. Thanks for joining. My name is Blake Morrow with ForexAnalytix. Have a great trading week.